with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, the U.S. has released its latest CPI number. So how might the Federal Reserve react with its monetary policy? And Foxconn is hiring more workers at the world's largest iPhone factory in Henan Province. Why is the company making this move now? And now let's begin with our top story. The U.S. inflation eased for the fourth straight month in July. The headline inflation rose 2.9% from a year ago, and that is the lowest rate since March of 2021. And meanwhile, the producer price index, or PPI, rose 2.2% year on year. So what does the latest figure tell us about the U.S. economy? And what will the Federal Reserve do with this data as far as the rate cuts? For more on this, join us on the line now, Professor Qu Qiang, Fellow of the Belt and Road Research Center at Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. So Yan, I will start with you. The U.S. inflation figure rose 2.9% in July. So could you please walk through the details of this number and tell us what does this number mean about the U.S. economy?
Right. So I think the CPI number indicates that the United States inflation rate continues to decline, so that this inflationary process is going quite well. So you just mentioned the CPI number for year-on-year change is 2.9% in July, and that represents also a 0.2% increase month on month. And so this has been, seemed to be a trend. So right now, the U.S. inflation rate has reached the lowest point since March 2021. And when you look at the core CPI, so that is CPI excludes the food and energy, it is at the 3.2% annual rate, which pretty much meets the expectation. So what that means is that it seems that the inflation is moving towards the desirable direction as the Fed would like. But again, when you look at the specific items that account for the inflation, mostly it comes from the shelter costs, which is pretty much responsible for 90% of all the items in that inflation measures. The food price also increased by 0.2%, whereas the energy was pretty flat. So I think at this point, it simply indicates even though the inflation rate still has not returned to that 2% as the Fed would set as a target, there's not really much the Fed monetary policy, keeping the interest rate higher for longer would really help for the bring down inflation. Because again, most of the inflation still comes from the shelter costs, which means, this is a very hard demand for people. They need to live in a house. So higher interest rates would only reduce the supply of housing because that makes housing construction more expensive, but it's not going to reduce people's demand for housing. So I think that would mean monetary policy would become less and less effective in bringing down the inflation, which could also mean the last mile of the inflation fighting battle would be even tougher.
So, Professor Qu, how do you read the latest inflation number of the U.S. and what does it tell us about the U.S. economy?
Well, I think Professor Yan Liang has mentioned very correctly. I think the inflation pressure in America is easing for sure. I think this is in line with the general trend with the rest of the world, especially in the developed nation. We've been seeing that in Germany, in France, in the UK, their economy are having a similar trend. That's the reason why I think 3 months ago or even half a year ago, some of the developed economy in Europe started to lower their interest rate. And I think most of the reason for that, I think it's because the drop of the raw materials and energy, as well as the high interest rate policy to tighten up the monetary policy has already shown the effect. But I still see some questions happening with this data. For example, if I take a look at the CPI, for sure, CPI is dropping. That's because within the CPI basket in America, most of the elements is actually of the raw materials, food, these expandable factors. If you take a look at the core CPI in America, it's still 2.9%, just a 0.1%, and you have to adjust that data according to the seasonal factors. What's the difference between the core CPI and the CPI? I think the most important differences in a basket is the service indicators. So I think if they're dropping from the 3.0% to 2.5%, I think that statistically can be meaningful. But only from 3.0 to 2.9 and adjusted by the season, I don't think quite much. This number stands for some realistic changes. And also, if I take a look at another very important indicator, actually, I think the Federal Reserve Act will pay attention to is what we call the super core. The super core number is actually, for the inflation, is still more than 3%. So I think this number in July actually is not that what we call statistically outstanding.
And Professor Chu, so what do you think are some of the current structural problems for the U.S. economy right now?
I see that in the short term, I don't think there's going to be much of the crisis or a great recession happening to the financial market in America, because you have to understand the stabilization capacity in the Federal Reserve and even the BOJ, Bank of Japan, is very strong. So you see the return of the market in the past 3 days, in the past 1 week, right? But the structural and long-term problem for the American economy is still very outstanding. Well, if you take a look at the rise up of the American stock market, most of the growth in the stock indicators actually came from the Magnificent Seven, the tech giant companies. But if you take like the Russell 1000 indicator for the SMEs in American stock market, most of the companies adjusted by the inflation rate, their income, their balance sheet is even in a negative zone. So which means small enterprises is not earning the real money. And, 20% of the middle income class and the rich class with the technology, with the capitals, that they're getting a good job. They're getting a good income in the past 3 or 4 years. But if you take a look at the 80% of actually the working class, the blue collars, their real income adjusted by the inflation is actually also in the negative zone. So that's a reason why, we can view the whole thing from another perspective. That's a reason why MAGA is so much welcomed by the blue collar groups. I think there's a reason for that. That is the huge imbalance happening in the American economy is still persistent. So I think that thing need to be taken into really serious consideration.
So the U.S. government debt has also skyrocketed to $35 trillion US, and it continues to rise. So what's behind the ballooning U.S. national debt?
Right. So the current national debt, I think on the one hand is in a way sort of endogenous, meaning that it's a response to the economic system, because during COVID years, the economy shrank, the tax revenues went down, and the government has rolled out $5 trillion of sort of rescue packages. And so that definitely added to the U.S. national debt. And then we know on top of that, some of these debt is really not used productively because, there are $800 billion budgets for defense. And there's also close to $600 billion or even more than $600 billion of interest payments on the existing treasuries. So I think, these deficit spending is adding to the national debt. Now, the deficit spending is stimulus for the economy. And I think that is one of the reasons why the United States recovered very well out of the COVID. But at the same time, I think there are a number of issues with this large amount of national debt. For one is, again, as I just mentioned, the $600 billion of interest payment on the treasuries amounts to a very regressive income transfer to the rich people, because it's basically the rich people are holding those U.S. treasuries. And so this is sort of a free money. They're going to the most rich people in the United States. So I think that is very pernicious. And second of all, I think even though, the United States, the federal government is using the U.S. dollar, so they're not going to run out of payments because they have, the complete control over the U.S. dollars. That said, I think there are a lot of political battles over, for example, debt ceilings and so on and so forth. So I think we cannot rule out the possibility of voluntary default of the U.S. government. And that could be really, I would say, it will definitely send shockwaves, not only to the U.S. economy, but also to the global economy, giving the U.S.'s reserve currency status and giving that so many U.S. treasuries are held abroad, especially by Japan, China, South Korea, and Saudi Arabia and others. So I think, this definitely could be a risk, but it's not really I would say, a sort of economic risk as much as being a unjust, uneven distribution of income, as well as a political risk, where there could be, really defunct political system that force a, default on the part of the U.S. government.
So, Professor Xu, so do you expect the U.S. national debt to continue rising, or what will be the consequences of such high debt levels?
Well, of course, it's going to keep on rising. Otherwise, is there any other solution towards, American structural problem? I don't think so. With this 35 trillion US dollar debt piling up, I don't think there is any other measures in a midterm and short term to solve that kind of the debt. I think only by paying up the interest rate will cost American government a really good fortune and also give them lots of pressures. Unless they have some major breakthrough in the technologies, for example, the fusion technology, or they invented like the cyberpunk society or something like that. I don't think they're going to solve the problem immediately. I don't think American debt, national debt, is going to explode as soon as possible, because I think American government still have very strong power in the monetary policy, and they have the hegemony in the monetary, powers, so which they can always issue extra U.S. dollars to, pay off their debt, and also transfer their problems to other nations, especially developing nations, to push up the international inflation, to enhance the other countries' debt issue, and also harvest another nation's financial assets. So this is happened hundreds and thousands of times in the past 100 years. So I think if their debt keep on piling up, I think the imbalance problem in American economy is going to be more and more serious, and not only in America. And I think the whole total imbalance situation in a global economy, in a globalization, will also continue to get worse. And before we can have some major shift in technology and social structures and economic growth pattern, otherwise, I don't think there is a very simple way to solve that problem. And probably we're going to hit a very serious disaster economically and politically before we can correct this trend.
Mm-hmm. And so actually, yen, the US dollar is a reserve currency you mentioned. So how will the debt impact the status of the US dollar, the global capital markets, and the financial system, do you think?
Right. So I definitely think that with the growth of the U.S. debt, the issuance of U.S. treasuries, it may in some ways change, the rest of the world's portfolio preferences. They may not keep piling up the U.S. treasuries, and they worried about the political defunct system could lead to, defaults. And so countries would diversify away from the treasuries and the dollars and adopt other currencies or gold or other reserves. And so I think that could in some ways have complications for the global financial architecture. But to me, the really problem is the U.S.'s economy is hollowing out. I think that is a bigger problem in terms of the so-called economic leadership by the United States, because as we know, the U.S. dollar continues to play this hegemon and reserve currency, but its share in terms of the trade financing has gone down now to about 50%, even though it continues to dominate the global payment system. So what that means is that for the real economy, like production, like trade, the U.S. is going to continue to diminish its significance in the global economy, whereas in the more fictitious financialized world, we're going to continue to see the U.S. dominance. So the question is how long these kinds of divergences can continue. And I agree with Professor Xu, if the U.S. dollar and the United States economy is dethroned, we would likely to see, instability and possibly crises around the world. Now, going back to the U.S.'s structural problem, I think, on the one hand, we very much rely on the consumer demand, but we start to see that consumers are really feel stretched. For example, the perceived likelihood of missing a minimum debt payment in the next 3 months, starting this month, has jumped up to 13.3%, which is the highest since the pandemic year of 2020. And most of these, missing payments would come from families with annual income below 50,000. The expectation of consumers for their credit assets also declined. So I think, there's a question that how long we can really rely on the consumers in the U.S. to keep, deficit spend and popped up the economy. And of course, I think the deindustrialization is a big concern. And the Trump 2.0, the possible outcome of the election could easily jeopardize any gain in the manufacturing, production since the industrial policies enacted by Biden, and could also easily shatter the whole battle against climate change. So I think those are really the structural problems the U.S. is facing with.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and also Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China. And after a short break, Foxconn hires more workers at the world's largest iPhone factory in Zhengzhou. Stay with us.
Welcome. I'm Elaf Ellard, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. Foxconn is hiring more shift workers with higher wages at the world's largest iPhone factory in Zhengzhou, Henan Province, before the September launch of the Apple's new smartphone edition. Media reports say the assembler, also known as Honghai Precision Industry, recruited more than 50,000 workers in Zhengzhou over the past 2 weeks. Foxconn, the world's largest assembler of Apple's electronic devices, also operates factories in Shenzhen, Chengdu, and Yantai in China. Apple faces more competition from local phone makers, including Huawei, Xiaomi, and Oppo. So yeah, actually, Foxconn adds more workers in Zhengzhou plant as it prepares for the new iPhone launch. So how do you explain it? Will Apple produce most of its new iPhone lineup in China, or will it reduce its dependence on the country?
Yeah, I think this is a great question. For me, what it suggests is that China is really an indispensable node in the global supply chain for Apple and, of course, many other transnational corporations. So I think the reason that, Foxconn is adding more workers and spending production is because, again, like you mentioned, iPhone is going to roll out the 16th edition, and they plan to, or they set the goal of producing and selling 90 million iPhone 16 in the second half of this year, which is going to be a 10% growth compared to the previous generation. So this large amount of volume of production in a short amount of time, I think only China can stand up for that sort of challenge. And so that's why I think, the dependence on China for manufacturing of iPhones and other consumer electronics, I think could only increase over time. I know for geopolitical reasons, iPhone has been talking about, this sort of China plus one strategy. So they will still maintain the production in China, but also diversify the productions to other countries, especially, for example, India and Vietnam. But that said, I think none of the countries in the world is able to really rival China when it comes to production capacity, when it comes to technological know-how, when it comes to infrastructure, and when it comes to the skilled labor force, and so on and so forth. Not to mention the favorable, economic and business environment. So I do think that, these production will continue on in China. However, I think as China continue to climb up the value chain and continue to upscale its, production, I think China will exit some of the very low-end assembly, processing, and production parts. And I think that would be good for China. So I would not be surprised that some of the medias would say, some of the production moves out from China. But I think that is a conscious choice and a deliberate strategy of China to move up the value chain.
And Professor Chu, so why do you think did Apple make this move now? And how do you compare China and India as Apple's production bases?
Well, I think basically Apple has learned a lesson as well as many of other high-tech manufacturers in the whole world, not only Americans, but also Chinese, European Union. So they have already learned the lesson. Just take a look. The reason why China became the factory of the world is not by coincidence. It's made by many factors combined together. It's not only you have cheap labor. If cheap labor can be the reason for a country or a region to be the manufacturing center of the whole world, I think Africa probably is going to be the factory of the whole world right now. But obviously it's not, because you do not only need cheap laborers, and also you need the labor with good education, the labor with good organization. And above that, you need your factory being located in the places with great safety, with great energy supply, water supply, internet coverage, and also you need the legal systems, rule of law, and you need clean environment of the politics, no corruption, no embezzlement, as well as domestic stability, as well as international stability. You have to have all these compounded factors in together in one places, and then you can have a very stable environment for you to develop your own company, because manufacturing is not about just a 1 minute or 1 day trade in the stock market. It's more like you downput like billions of US dollar to nurture your management team, your production team. You downput your money to build the workshops, factories, infrastructures, devices, and you build long-term local supply chain. We're talking about 10 years or 20 years of a long-term stable investment and output in here. You do not tolerate with the short-term dramatic changes. And I think that is the reason why most of the enterprises chose China in the past 40 or 50 years, and they find out that China is the best places to accommodate all these good factors. But India is basically not. Well, indeed, they have cheap laborers and a certain team of the engineers, but also you need to see the environment, the local bureaucratic situation, corruption, and also the nationalism, as well as the bad relation between India and the neighboring nations, Bangladesh, Pakistan, you name it. And then the supply chain is also very awful. You cannot just find out all kinds of parts within a 50 kilometers radius, so which make the supply chain more expensive. So all these negative factors actually offset the cheap labor's good, but bring in you more bad. So I think that's a reason why Apple supply chain find out they can not always find the quality productions and meet their standard. So I think that's a reason why they want to remove all those supply chain back into China and to rebuild their capacities. And considering about the bad performances in the stock market of the Apple company in a recent 1 or 2 years, I think Apple has already learned the lesson and they want to, reverse the trend.
Mm-hmm. And so, yes, Apple actually faces more competition from the local smartphone makers in Chinese market, including Huawei, Xiaomi, and Oppo. So how do you see this competition? And globally, what is the key to smartphone competition?
Right. So I think, yes, you're right. Apple's market share has been shrinking in China. Now is down to 14% in the second quarter of this year, compared to 16% a year earlier. And you're right. I think one of the reasons is because of the fierce competition from the local smartphone makers. Right now, Vivo, Oppo, Honor, which is Huawei's spin-off, and Huawei and Xiaomi, those top 5 local brands actually are dominating half of the markets, over half of the markets. So I think, one of the reasons is because, the Chinese vendors, they're really strive for high-end products, and they have the deep collaboration of with the local supply chains, and they're able to really upgrade its hardware and software in very fast turnaround time. And one of the example is Honor's latest Magic V3, which has been leveraging on the general AI functions. And that has really enhanced the user experience of the foldable devices. So, and also we know Huawei's Mate 60 has been very popular. So I think in terms of the local brands, local makers, they're very much leveraged on China's supply chain. And I agree with Professor Chi. India's manufacturing is only about 14% of the India's GDP. China doubles that, which means a lot of the local components can be sourced in China, but not necessarily in India. And I think that makes a huge difference when it comes to how fast you're able to roll out your products. And how you can cut the costs when it comes to locally sourced components. And I think going back to the question about why now that Apple is investing heavily in China, not only opening more production lines, but also they have invested $1 billion to build new business quarter and also research development centers in Zhengzhou. I think that indicates that Apple really wants to localize their intelligence services, because that is the key for Apple to be able to upgrade their phones, to integrate AI technologies in their phones. And that would help them to become more competitive down the road, because Apple is already late in that AI race. So I think now the question of coming back now is not only to expand the production capacity, but really to integrate itself into that technological ecosystem that you can find nowhere else but in China. So I think that is really the key to understand why the Chinese competitors are so competitive, but also knowing why Apple is returning to China, not only for production, but also for R&D at this point.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.